Hey folks, Shawn Plummer over at the Annuity Expert. Today's video, we're going to be answering the question, what is a life-only annuity? Okay, so every annuity has a provision called annuitization. Some annuities require, so it's mandatory to annuitize your contract, and others are, it's optional. Okay, so if you look at a SPIA, that is annuitization. Okay. If you are getting a pension annuity, that is annuitization. If you're getting a DIA, which is a version of the SPIA, but the income starts in the future, that is annuitization. That is all mandatory. Okay. And just to kind of elaborate on the ones that aren't required, fixed annuities, fixed index annuities, variable annuities. Those annuities, they have the option to annuitize the contract, but it's merely an option. Okay. So anyway, getting back to the annuitization. So these annuitizations, it's the conversion of a lump sum of money into a stream of annuity payments. The annuity payments are irrevocable. Irrevocable means once you start the annuity payments, there's no turning back. There's no canceling. There's no control of your money. It's just collecting a paycheck each and every month for a fixed period of time or for the rest of your life. Okay. So the payout life only states that it's going to pay you an income for the rest of your life. And when you die, the insurance company keeps the rest of the money. Okay. So for example, so let's say you got a $100,000 life only annuity. It's going to pay you $5,000 a year for the rest of your life. In year 5, you get hit by a bus. Insurance company keeps the rest of the money. No death benefit for beneficiaries. Now you're asking yourself, well, why in the hell would anybody do that? Well, because a life-only annuity pays the highest income amongst the annuitized payments, payout structures. So, and there's different payouts: life only, life with period certain, life with cash refund. There's joint survivor, period certain only, life with cash refund, life with installment refund. There's all these different payout structures. Life only, focus on the word only. Only means, hey, the insurance company is going to contractually guarantee you a payment for your life only, no other lives, no death benefit, right? So what do you do about that? Do you just, okay, I don't want an annuity? No, you look at other different payout structures. You could do, and there's several options. My favorite option is to not buy an annuitized contract at all and to buy a fixed or fixed index annuity with a guaranteed lifetime withdrawal benefit and get an income that'll pay you for the rest of your life and will provide a lump sum death benefit to your beneficiaries. That strategy, in a lot of scenarios, not all, but a lot of them, will pay a higher income to your to you and leave the remaining balance to your beneficiaries in a lump sum, and you maintain control over your money. It's revocable annuity payments, not irrevocable. So that means you could turn the income on and off, cancel the contract if you want, add a bell and whistle, earn interest, leave a lump sum death benefit, etc. All the things that suck about the life only annuity are corrected by buying a fixed or fixed index annuity with a guaranteed lifetime withdrawal benefit. Okay. So let's just say I'm young. I'm younger than age 59 and a half. I'm thinking about getting an annuity, and a SPIA is the only route for me that I can go with, right? And I'm looking at my different payout options. In life only, I don't like life only, but it pays the highest income. What can I do about it? Well, there's a couple of options, okay? Number one, you go out and buy a cheap term life insurance policy for the amount of the life only annuity. So if you're buying a $100,000 life only annuity, you would buy a $100,000 20, 30, or 40-year term life insurance policy. This way, you die, when you die, it will trigger a tax-free lump sum death benefit to your beneficiaries, and then they're taken care of, and then you're not so much worried about the insurance company keeping the money. So that's one option. Another option is you can add what's called life with period certain. And life with period certain basically says that, hey, we're going to pay you, the insurance company will pay you a contractually guaranteed income for the rest of your life. But if you happen to die before a certain guaranteed period, let's say 10 years, the first 10 years, we're going to continue to give payments for the remaining part of the guaranteed period. So for example, going back to the $100,000 SPIA, it's paying you $5,000 a year for the rest of your life. You get hit by a bus in year 5. A life with periods certain, with a 10-year period certain, will pay your beneficiaries the same payment in years 5, 6, 7, 8, 9, and 10, and then it's done after year 10. Okay, you could do that. You could do a life with 10-year period certain. You could do a life with 15-year period certain. You could do a life with 20-year period certain, so forth. Right? You could structure it that way so that if you die prematurely, your beneficiaries continue to get those annuity payments. You could do a life with installment or cash refund. That means it'll pay you an income for the rest of your life. And when you die, whatever's left of the initial investment that you've given to the insurance company will be paid to your beneficiaries either in installments or in a lump sum, right? So that's a life-only annuity. If I had to stack up all of those options, the best option is buying a fixed or fixed index annuity so you don't lose money in the market. Adding on a guaranteed lifetime withdrawal benefit, it will likely come at an additional fee. It's deducted from your account. You don't have to pay the insurance company each year. They'll just deduct it from your annuity. And it will give you a contractual guaranteed income for the rest of your life and or the rest of you and your spouse's lifetime. And whatever's left in the contract will go down to your beneficiaries in a lump sum. And all the wrongs are righted with that method. So you got any questions about that? Leave a comment below. You want to contact us for a comparison. We've got a calculator here on our website that is hooked up to about 25, 30 annuity companies. It'll give you real-time payouts, and you can use it as much as you want anonymously. And if you want a comparison where you see all the different insurance companies and what they're going to pay out for several years in the future, you can do that. It's a free, no obligation comparison sheet that we give to you. So if you've got any questions, leave a comment below or call us, and we'll catch you on the next video. See ya.